Hey traders, Nick Shaheen here looking at Citigroup. A friend of mine asked me recently, we traded it nicely on the upside, but the earnings have been disappointing with the banks. Yes, they beat expectations, but I think the trading desks were somewhat disappointing. So not all expectations were met, and they have been disappointing in reaction. They pop on the news and then they fade into the day. Maybe we have, I think, Goldman Sachs and Morgan Stanley up next this week. Maybe those two can turn it around. But the problem is that Goldman Sachs is seen as the trader probably among all of these banks. So if it too disappoints on the trading side, the bank trade is kind of broken for now. But what it has on its side is value. In a rising rate environment, they should benefit. And if markets in general don't fall apart, they should be able to grow into that benefit or perceived benefit. So Citigroup in particular, let's look at it from here. I always like to look to the left to see where people say I don't care where the stock came from. Well, I do, just to see where it's going to do here. So it's at a pivot point. So if I look at the short term, okay, this is an obvious pivot point for the last couple of weeks, 2-3 weeks. This is a daily candle chart. But if I look further to the left, it's even more important as far as a pivot point. Here, I can argue that this was a test of it. This is a test of it, almost to the penny. This is a breakout point. And this had been a failed test of it. So if one can say this was resistance, this was a breakout, this was support, this was support, this is ongoing support test, and here it is back at it. So what's going to happen from here on out? I'm pretty sure that it has some support here because this is the bottom of this area and the consolidated zone here. So they spent some time, what is that, eyeball 2.5 months trading it, or 2 months trading it down here. So if it falls into that zone, the battle should continue unless there's a specific headline that makes it slice through it. And if that fails, there's other stuff behind it, I'm sure of it. So what's the bottom line here? The bottom line is Citigroup is pretty cheap valuation-wise. I haven't checked this week, but last time I did, it was trading, 11 PE and under book as far as price to book. Let's see here, trailing 12 months, 12 and a half, and book is just over. So it's trailing at book value. So it's not exorbitantly expensive. This is a weekly chart. So if I'm short puts in it, I'm not sweating this. Am I gutsy enough to sell short puts? Sure. I bet you I can find September puts that pay about $1, somewhere on the 60 level. I can go out to January, probably get $2 for that same level, or $1 for a 57.50. So that would be a good point to own it. So this is a weekly chart that shows, okay, banks have run too far, too fast. Even if you say too far, I don't believe it's too far. Too fast maybe, but not too far. So if it gets back to this major pivot point, for the same reasons we just discussed above, so that zone here should be a solid place to own it. So if you think it's expensive here, why not collect a few bucks to own it down here? Just from a percentage perspective, you'd be a huge percent buffer zone between here and there before I put the stock. So what happens if I sell a put? I collect money, goes into my account today. That money is not mine yet until the time expires, and I'm not put the stock. But even if I put the stock, I wake up owning shares of Citigroup at a huge discount to what it is right now, and I have the extra money in my pocket to benefit. So my break-even point is actually lower by however much I collect, either $1 or $2, depends on the strike. So yeah, Citigroup is challenged, but it's not alone. I mean, Bank of America today again reported, and it too disappointed. This is a weekly chart on the XLF altogether. So they did run quite a bit, quite fast, but that's because they were grossly mispriced in my opinion. So if we overshot to the upside and now they're breathing to consolidate before they can bring about another plateau for higher levels, I could be long the XLF, and I am somewhat long the XLF via other trades that I've shared with members, JP Morgan for example, or even the XLF calls all by themselves. I'm comfortable with it, but I'm definitely more comfortable with the downside support of banks. So if you have any more questions about this, you can reach me via email or reach through social media. Email is sellspreads@gmail.com. Sellspreads@gmail.com. Nick signing out.